We're planning on converting our accounting system. What should we consider to do this project well? Yeah, it's a good bet that other people on this call have also managed accounting system conversion projects, including not only doing it from scratch yourself, but including coming in after a client has attempted it internally, DIY, and it hasn't gone well. So you've had to determine, all right, do we scrap it and start over? Do we clean up what's here? What can we do to get everybody on the right track? These are the broad categories of things that are worth considering in order to do an accounting system conversion well. First, and I want to highlight, the way this question came to me is we're planning on converting. So in my answer, I'm not going to question whether or not you should convert, and we're not going to talk about what you should convert to. That's not part of this question as it was provided to me. So in principle, to plan a successful conversion project for your accounting system, first, in phase one, make sure that your existing file is cleaned up relative to the features of the new system. So if you have negative inventory, the conversion, something's likely going to get fouled up in the conversion process, clean it up. If you have old outstanding, if you have old bill payments that aren't applied to an open bill, that could foul up the conversion. If you have, those are some technical specifications. If you're using QuickBooks Desktop and your balance sheet is out of balance, troubleshoot that before converting to a different accounting system. Another thing to consider is that this is a prime time, a great opportunity to go over some incompletions in your accounting file that have just been kicked down the road. What's that expression, kicking the can down the road? They haven't been powerfully dealt with by anyone on your accounting team. Maybe it's an outstanding check from 5 years ago. Yes, technically speaking, you can convert that into the new file. But more often than not, people who are converting their accounting system are looking for a fresh start. They want new features to take them into their future. They want to spend less time on it, more automation, cleaner outputs that they can use to make decisions. So don't drag along 5 years of incorrect information from the past into the new system. If you're going for a fresh start, go for a fresh start. So phase one, start with the things that are going to prove to be buggy. Phase two, look for those old items, the invoices from 7 years ago that are still open. All right, dude, you're not gonna collect on that invoice. Write it off. Something similar, if there are old bills from years ago that do a little investigation. Maybe the bill actually was paid in reality, but the payable wasn't closed out. It can be a great opportunity to fix those old outstanding items before you convert. Another thing to consider is the size of your list. If there are customers from a long time ago, donors from a long time ago, vendors, accounts that haven't been used in years, you'll want to notate those, and when you convert your accounting system into your new one, get rid of those list elements. Let's not drag the past into the future, but go and have the new accounting system support the new future that you're creating, the bigger future, the more streamlined future. Welcome, Kim. Welcome to the call. So glad you're here. Those are things to consider. Another thing to consider is when you're doing an accounting system conversion is to set up the new system with all of the features that will bring you clarity and streamlining in what you're creating next. So wake up those features, adjust the settings if possible before the data is brought in, so maximum data can be brought in to support you in that new future. And the last thing, make sure to draw a line and say, this is the conversion date. And the date of this recording is July 31st, 2018. And if you say, at the close of business, July 31st, 2018, we're going to stop using our old system, convert it into the new system, and everything else that happens in reality after that is going to be entered into the new system. Then 731 is your line, your dividing line there. So one of the things that you definitely want to do after you convert is, before any other changes have been made to the new system, compare your reports to your old system. Make sure they match. Your accrual basis and cash basis reports, and your balance sheet, your income statement, otherwise known as profit and loss, your receivables aging, your payables aging, your inventory reports, your bank reconciliations. Make sure those match. And then if you want to make some changes to the chart of accounts, fine. Then if you want to add more transactions to the file, even fixing things in the past, fine, do it in the new system, but not until you have compared these two sets of reports and found them to be identical. Once you have done that, then you know that the conversion was a success, and you're off and running in your new file, and you can create all the new procedures, streamlined chart of accounts, anything that your heart desires. But if you don't have that set of reports that you compare first, you'll never know if everything came over correctly. Let me tell you, that drags at you. It takes your time, it takes your energy, years into the future, because these things never die. You're always wondering, did this come over? Or you get to an issue with the data. I'm not sure, let me check the old system. Maybe you can access the old system, maybe you can't. But why should you have to? It's just not necessary to have that kind of drag on your time and energy. So make sure the two sets of reports are equal.